8.5%. That is the dividend yield Legal & General is paying right now, nearly double what you would get from a savings account. So why is almost nobody talking about this stock? In this video, I am going to break down exactly what Legal & General does, why the yield is so high, and the one number that will tell you whether this dividend is safe or a ticking time bomb. Before we start, this is not investment advice. I am simply documenting my own investing journey. Please do your own research before putting any money into the stock market. Legal & General Group, ticker LGEN on the London Stock Exchange, has been around since 1836. That is nearly 200 years. It is one of the largest financial services companies in the UK, managing over £1 trillion in assets. But what does it actually do? Three main things. First, it runs one of the biggest pension and retirement businesses in the country. Millions of people have their workplace pensions managed by Legal & General without even knowing it. Second, it provides life insurance and protection products. And third, through its investment arm, it puts money into long-term assets like housing, clean energy and infrastructure. Think of it as the plumbing of the UK financial system. Not glamorous, not exciting, but absolutely essential. Now here is where it gets interesting. If you look at the 5-year chart, the share price has had a rough time. It was trading above 300 pence before the pandemic, dropped hard, recovered, and then fell again. Right now, it sits at around 250 pence. That is well below its highs, and that is exactly why the yield is so high. Remember, dividend yield is just the annual dividend divided by the share price. When the share price falls and the dividend stays the same, the yield goes up. So the question is, has the share price fallen because something is fundamentally wrong, or is this a bargain? Let us look at the dividend track record. Legal & General has increased its dividend in 14 of the last 15 years. The only year it did not was 2020, during the pandemic, when the regulator told all UK insurers to pause dividend payments as a precaution. As soon as that restriction was lifted, Legal & General brought the dividend straight back and continued growing it. The current dividend is around 21 pence per share. That is up from 9 pence per share a decade ago, more than doubled. That is not a company that pays dividends reluctantly. That is a company that is committed to returning cash to shareholders year after year. So what is the bull case? Why might this stock be worth buying at this price? First, the yield. At around 8.5%, you are getting paid generously to hold it. Even if the share price goes nowhere, you are earning almost double what cash in the bank would give you. Second, the pension business is growing. An aging population means more demand for retirement products. Legal & General is well positioned to benefit from that long-term trend. Third, the balance sheet is solid. Solvency coverage is well above the regulatory minimum. This is not a company on the brink. And fourth, management has explicitly committed to maintaining a progressive dividend policy. They want the dividend to keep growing. But I would not be doing my job if I did not tell you the risks. And there is one number that concerns me: dividend cover. This is the ratio of earnings per share to dividend per share. It tells you whether a company can actually afford the dividend it is paying. A cover ratio of 2 means the company earns double what it pays out. Comfortable. A ratio below 1 means it is paying more in dividends than it earns. That is a red flag. Legal & General's dividend cover has been hovering around 1 for the past couple of years. That is tight. It means almost all of the company's earnings are going straight back out to shareholders. There is very little margin for error. If earnings dip, even slightly, the dividend could come under pressure. And if the dividend gets cut, the share price will almost certainly follow. So here are all the key numbers in one place. Share price around 250 pence, yield at 8.5%, dividend per share at 21 pence, but that dividend cover ratio sitting at roughly 1 times. That is the number to watch. So where does that leave me? I think Legal & General is a calculated bet. The yield is exceptional. The track record is strong. The business is not going anywhere. But the dividend cover is the weak spot, and I am not ignoring that. Here is what I am doing. I have put £120 into legal and general. That is my largest single position. I believe the dividend is more likely to be maintained than cut, especially with management's public commitment to it. But I am not putting everything into one basket. I am watching three things closely: earnings per share at the next results, the solvency ratio, and any change in the dividend policy from management. If any of those flash a warning, I will reassess. If you want to start your own dividend journey, I use Trading 212 for my stocks and shares ISA. No trading fees, fractional shares, and they are currently offering a free share worth up to £100 when you sign up and deposit at least £1. I will leave my referral link in the description. It is the platform you see in every screenshot on this channel. And here is the exciting part. Legal and General goes ex-dividend on the 23rd of April. That is just days away. Because I bought my shares before that date, I am locked in for my very first dividend payment. It should arrive in early June. It will not be much. On 47 shares at 21p each, I am looking at roughly £10. But it is my first real dividend, the first snowflake of the snowball, and I cannot wait to show you when it lands. That is Legal and General, an 8.5% yield that I believe is worth the risk, with eyes wide open about the one number that could change everything. If you found this useful, subscribe. I am doing a full deep dive like this on every stock I add to the portfolio. Next up is Aviva, which has a very different risk profile to LGEN, and I think the comparison is fascinating. Drop a comment and let me know. Would you buy Legal and General at this price, or is that dividend cover too risky for you? Until next time, happy investing.